of aviation in focus. Let's welcome on board Sandeep Sabharwal as well and ask him about what he's making of the market right now. Sandeep, it's a problem of plenty. I don't know which problem to really focus in on. But first, let's talk about crude. Does it seem like this 100 mark could be sustainable this time?
I think predicting crude prices is like predicting the weather these days, so it's very tough. So all we can say is that the situation is worse than what it was at the start of the conflict because a lot of inventories have run out. And if the disruptions continue for another couple of weeks, then we could actually see some unnatural spikes coming up as the supply concerns would continue to grow. So I think this is a critical factor. Still, the crude is around $100, or the in Brent and other varieties are between 85 to 90, $92, which is still not bad. But then, given the state of the rundown of the inventories, I think we are in a situation where we could suddenly see a huge spike. So I think we need to watch out for that.
Sandeep, of course, subject to the spike or otherwise, do you go out and buy the dip in terms of equities?
Yes, a lot of companies are doing very well. Some companies might not have too much relation to crude prices also in the near term or even the longer term. So, but then on a macro basis, if there is a overall valuation compression, then all companies suffer. X of that, from the Indian context, I don't think valuations are very expensive. And uh, overall, macro wise, India is pretty well placed. And in terms of corporate results, also, they've been decent enough. But this is the only overhang that's there. Now, we could try and predict that it will get over next week and then suddenly markets will run up. But then, how do we do that? Because we don't know. But then, obviously, for long term investors, any sharp dips will always be buying opportunities in stocks they like.
Indeed. So what is it that you've been buying, Sandeep?
So I think lately we have been nibbling into some auto companies like M&M, etc., on the large cap side because the monsoons have picked up. Company has been doing well, but then because of monsoon concern, the stock got beaten down, and so that could perform. But again, the auto sector has a negative correlation to crude oil prices. So in the near term, we could also see some pressure coming through there. In
I know
terms of
you're.
other stocks,
No, no,
yeah, what
please
are
go
you
ahead,
saying?
Sandeep. Please go ahead.
So in terms of other stocks we like, which the market doesn't like so much, like PVR, Inox came out with very strong results with huge deleveraging, and now they are at zero debt with a positive cash balance, and they've done very well in uh, reshaping their balance sheet even in tough times. So I think the valuations seem very cheap to me, so that remains a contrarian bet for me.
Sandeep, I know you're bullish with regard to Interglobe as well, but at the current price, 5,000-ish, and if we were to see a 5 or a 7% correction today, just given the kind of numbers that we saw, uh, should you go out and buy at these kind of prices?
Yeah, Interglobe, I think longer term there is no real concern. It's just that in the short term, one, we are now in a lean quarter, July to September, which is typically a lean quarter for airlines. And in that lean quarter, if we actually see another spike in input prices, that could pressure profitability for this quarter also. So, given their dominance of the Indian aviation industry and the fact that it's a very tough industry, so even if new players come in, for them to scale up is very, very tough. So I think Interglobe remains very strongly positioned. So I would so whoever is owning the stock, I don't think they should be bothered by whatever is happening in the near term. whoever wants to buy could potentially slowly buy and see whether crude is going to shoot up further or stabilize.
Thing about Interglobe, right, Kunal? Because the dips get very swiftly bought into. Correlate for us, last time when crude did spike above 100, where did Interglobe fall to? And do you sense that it could retest those levels by any chance? Should crude continue to hold up its value?
See, generally what happens is when certain asset classes impact a particular stock, there is an initial bout of a price action. But then the second time when it generally happens, the sensitivity to the stock prices that reduces quite sharply because investors who've already felt the pain in the previous cycle, they are the ones which are a little bit more skeptical when the asset class like crude in this case starts to spiral up higher. So I think that's why you've seen in the last maybe a week or so, interglobe aviation from those 53, 5400 levels has started to just about ebb off towards that 5000 mark. The last time when the stock had fallen, I think it was on the back of a couple of news flow, what happened in December 2025 for the stock price from 6000 levels. The stock in March 2026, I think fell down to sub 4000 levels or thereabout. So a good 2000 point correction, then a 1000 point bounce back for interglobe aviation. And now we are just about trying to navigate around the 5000 mark. I would actually believe that unless we see a dramatic spike on Brent crude, we should just about hover around the 4700, 5000 levels for interglobe aviation for the next few months. But for traders who are looking at this as a longer term opportunity, should try and capitalize on this leg of correction.
Sandeep, I wonder how you look at some of the private sector banks and each having their own sets of unique positives and negatives. But if at all you have a preference there, also IndusInd in particular, 6% lower despite everything remaining as is. In fact, a good set of numbers as well. You believe that the good numbers were built into and the stock just got sold off?
Yeah, so I think in financials, the turnaround typically takes a long time. So under the new CEO, the turnaround has started, but I think it will still take some time. So investors will, so this kind of volatility will continue in IndusInd Bank. Longer term prospects now seem better than what they were 6 months back. And overall, private sector banking space, the results overall were somewhat lower than or below expectations for banks like HDFC or Axis, etc. ICICI did well. Some of the smaller banks did better, some did worse. So I think it's been a mixed bag. But future prospects look better because of the strong credit growth and stabilization of net interest margins. And here also, the key monitorable remains the inflation outlook, which was starting to look benign after the initial run up, but with commodities again rally, so that could impact somewhat. But I think directionally, private sector banks look good to me. So top of the heap continues to be ICICI Bank, followed by Axis Bank on valuation because valuations are cheap. Kotak Bank also looks fine after years of not giving any returns. HDFC Bank is a work in progress, but I think around 700 levels that should also find a strong base. I think it's very tough to make a case for HDFC Bank to sustain below 700.
Well, 700, almost a good 50 odd points from the current levels as well. But Sandeep, one stock that I wanted to talk about with you was Paytm. The fact that the board rejected their maiden bonus issue, we saw that disappointment as well play out. Should investors read this as prudent capital conservation, or should it be read into as a broken promise?
So I think typically companies will report bonus issues when they have a sustained period of strong performance or they believe that the market is undervaluing them. So I think Paytm has just started to turn around and improve its profitability. So this was actually not the right time to do a bonus issue. So I think some traders must have got excited, then it got sold off. But fundamentally, like all of us know, bonus issues have no impact on the performance of the company. And should neither have an impact on the stock price performance.
Okay, fair point. Let's take a very quick break on that note. When we come back, continue our market discussion with Sandeep Sabharwal and Kunal Bothra. Well, it was a rough one yesterday, given that we significantly breached that 24K, support for the index. That said, yesterday we even breached 23,900 on the Nifty futures, and that fall got exaggerated towards the latter part of yesterday's trading session. A lot of sectors which caved in, and especially the broader end of the market as well, with Innocent falling 6% after good numbers. SRF was down 8%. Adani Green fell about 6.5%. Adani Enterprises was down 4%. And Bandhan Bank, which also fell about almost 4% after a disappointing set of numbers. Textile, power, telecom, realty, banks, oil and gas, these were the big drag points in the market. But Sandeep, have to discuss Infosys as well. A miss on all parameters, and now a new CEO as well. Although it's a very long handover time that he's been given from when he takes over from Salil Parekh. But having said that, you get further conviction on avoiding IT, or do you think now it's reaching that level where there is not much to lose?
Largely long term, it's still a sector where we should not have any big allocation. However, I think the post results and all the way the ADR also behaved and the valuation, which are at just 12, 13 times earnings for Infosys, reflects that a large part of the negativity has got factored into the stock price. On the flip side, when we look at the earnings growth picture, the next couple of years, the earnings growth picture for, let's say, Infosys is just a 3 to 5% kind of earnings growth, despite all the tailwinds that they are getting from the rupee depreciation. So it cannot be a sustainable growth sector where we invest and we say that we are not going to sell it for 2, 3 years or 4 years. So this is a swing trading or swing investment kind of sector now, where I think current valuations are reasonably attractive, but I don't see the stock price crossing maybe 12 to 15% higher from where it is. So to that extent, you try to take some small bets and for that kind of return. On the flip side, if the markets weaken and we get better sectors and stocks which actually have a more sustainable growth path, so you try to prefer that. So I don't think that there's a sector where we should be focused too much on.
Kunal, what's the read on the charts though?
See, I think for the IT names, largely the bounce back or the move in the last 1 month broadly has been positive. There have been many positives which have emerged. HCL Tech, Techem, for example, are the ones which have led this breakout the large cap front. Persistent has been doing very well for itself comparatively. So I would sense that that the overall price action for the IT stocks is a little bit more better than what has been earlier. There is a strong case that this 26,000 mark, which we hit on the Nifty IT index almost a month back, I think that is now very strong and a formidable support. We've broken the chain of lower highs and lower lows for the last 6 months, which has been going on for the IT index at large. So that's also another positive. So I would believe that this is a way where I would probably believe that selectively HCL Tech, TCS, Techem, etc., I think are the ones which on the large cap front should be bought into.
Right, okay, that's the take coming in on some of the technology names. Just looking at the market structure then, and let's see, where exactly do you see that meaningful move come in, given that the GIFT Nifty this morning is indicating a fair amount of downside. Having said that, Sandeep, the one pocket that you were also talking about earlier, the auto names, the one space with seeing renewed vigor within autos is the entire two-wheeler pack. TVS after its numbers, then it was Bajaj Auto, very impressive numbers, and now Hero Moto seems to be playing catch-up. Anything that's looking for a good buy even right now?
Yeah, so we continue to hold Bajaj Auto, and I think longer term prospects seem strong only, and management commentary was positive. TVS has obviously done very well, and they are firing on all cylinders, be it the EV portfolio, domestic market share gains, or even their focus on exports, which is doing well now. Valuations seem slightly high on TVS, but directionally, the company is doing well. And so the entire two-wheeler space seems to be doing well at this stage, be it the traditional two-wheelers who are also doing well in the ICE plus EV portfolio, or the some of the EV company focused companies like Ather.
How do you look at the latest developments on the US tariffs, Sandeep? I mean, status quo in terms of impact for the moment. But will this dissuade Trump from at least opening the tariff Pandora's box, if I can call it that?
Yeah, I think given the fact that they lost most of the legal challenges, so I think there's little they can do. So that's why these tariffs have come up. They seem neutral at this stage because most countries, competing countries, would be at similar tariffs or maybe 2.5% higher. Now, I haven't gone so deeply into it because this was against 60 countries. So then there'll be a whole host of countries which might not have any tariffs. So how does that impact India? That's something we need to see. But overall, it's a neutral move.
And Sandeep, you like export-facing companies, right? You had said that, I think, a week or so back when we had that conversation. This, of course, will only give those companies a bit of a leg up, if anything, because competing tariffs against maybe a China and a Vietnam are at 12.5, India is at 10. So slightly better from a competition standpoint. But give us your take. How would you play it? Which sectors, which pockets, stocks, and the like?
I think sector-wise, obviously, textile is something which took a big hit last year because of the additional tariffs on India. So they will benefit due to market share gains. Companies in auto ancillaries, etc., or some engineering products, they should see a good impetus because they had also got hurt, especially the engineering companies last year because of the high tariffs. So I think these will be the sectors and companies which should benefit.
How are you looking at some of the chemical companies, Sandeep? The likes of an SRF came out with numbers, looked like a very strong set. Commentary also was mildly positive. How should one look at them? Would you look at them afresh now that you've got the kind of numbers that you've got?
So I largely don't invest in chemical companies because I find it tough to evaluate them. And plus, most of these companies are doing very high capex. So most of the analysts tend to just multiply the capex with some number and forecast that they'll generate this kind of revenue. But it doesn't happen that way in the real world because if everyone is doing high capex, there could be phases of overcapacity, earnings compression also. So I think all those things also need to be evaluated.
Names from the auto ank space. We've spoken about auto, I know. But the auto ank, is that something that you're bullish about, just given the kind of numbers that's coming out of auto also?
Yeah, so many auto ancillary companies have domestic businesses doing well, plus exports also doing well for them. So, and the results also have been quite decent. So, there's a whole host of auto ancillary companies. So I think people can have their pick. On the tire side, only the pressure on profitability could sustain a bit more because both crude-based derivative as well as the rubber prices are sustaining higher, and that could impact profits for a slightly more prolonged period.
Okay. Sandeep, thank you so much for your perspective as always this morning.